I formulated a brand new Forex strategy, which, like the Power of Two, is very mechanical and very rule-based, however offers the flexibility to be able to extract more opportunity from the market for those who are more experienced traders. Now, to put this strategy to the test, I decided to take up a prop firm challenge and see if I could pass the challenge and verification and get funded, and see how long it would take me to do that. Now, will I pass or fail either the challenge or the verification? Will I even make it through to the verification stage? Well, I guess we'll find out. Now, before we get into the video, you might be thinking, what about the Power of Two? Well, the answer is yes, I'm still trading the Power of Two and always will do. However, because I have time in the day at the charts and I have that flexibility and that freedom and the experience, I can utilize this new strategy on an intraday basis and look for opportunities in between Power of Two trades. So it's the best of both worlds, and I'm really enjoying trading both strategies, both on the same pair. I'm not looking at any other pairs but EU, and I'm actually going to break down some of the trades I took on this challenge. Now let's get into it. Okay, so we can see in the screen in front, I've got the Definitive Funding dashboard open. This is a two-phase challenge. So you've got to get 7.5% on the phase one, 7.5% on the phase two. You can see that I can progress to the next stage now, having reached just over 7.8 in the last couple of weeks. There was a max drawdown on this daily of 5%, got nowhere near that. And a max equity drawdown of 10%, got nowhere near that. Just to let you know about my trade management and my risk exposure rules on this is I had a rule that from anything from starting balance to a positive 3%, I was risking 0.5% per trade. As soon as I'd closed 3% in profit on that account, I was then going to increase my risk up to 1%. So we only actually had like one trade during this whole challenge where I was full 1% risk. All of the others were at 0.5% risk. And the reason I do that is because it allows me to win faster and lose slower. So if I were to go into drawdown, it's only by 0.5% each time. And it's equal to bring myself back again. So if I get a winner, obviously 1-to-1, that brings me back. My average risk to reward was around 6-to-1. So that was quite easily putting me into profit. I don't think I went into drawdown much. I think I went probably about 1.2% in drawdown. I'll have a look at the metrics later. But yeah, that's pretty good. Very good strike rate. The risk to reward in the trades is good. Every trade I took on this challenge was pro momentum, pro 4-hour trend, and higher probability. So yeah, very pleased with that. I'm going to progress to the next stage and I'll let you know how I get on. Today is the 29th of November, so we'll see how long it takes me to pass the second stage. What I did want to run through was the final two trades that got me over the line on the challenge. Now there's 3 trades in the chart. This second one, full disclosure, did not take. It was on the Friday. I decided to paint a bedroom. It is what it is. I don't really care. There's plenty of opportunity with this strategy. So it goes to show I could have passed earlier last week. And then there was nothing on the Monday. And then I took this trade on Tuesday. But this first one then, if I just replay back to this, go out to the 4-hour. I mean, we can see Eurodollar's been clearly trending to the upside. And just really simply, just had this 4-hour dealing range on here on the swing bullish leg. Knowing that price had retraced fairly well into discount of this range. I know a lot of retail traders, a lot of smart money traders will be seeing this as a sell-off, but really it's not broken any structure on the 4-hour, so we're still bullish. If I jump to the 15-minute, all I'm doing now is following the 15-minute ranges. Now the 15-minute shifted bearish here, took 15-minute liquidity, and then we had 15-minute bearish momentum here. Until this point, this is the final 15-minute bearish range, which got taken over Asia. Nice push higher. What's this doing? It's taking liquidity. So I'm marking this area of buy-side liquidity has been taken, selling off. This is a key psychological level for retail traders, because again, remember what I said, the 4 hour looked like it was selling off. Also, the 15-minute looks like a typical SMC sell-off where you've got impulse, correction, impulse, leave liquidity, comes back to take liquidity, and then you're looking to sell. However, me knowing that one detail, that the 4 hour is still bullish, knowing that I'm going to do exactly the opposite of what most people are doing, and I'm going to be buying. So what we had here, we did have some news that took the lows, took the highs. So a bit of manipulation on price. So you'll notice that I actually ended up having the 15-minute range here because of the wicks, but I've got one internally because if we shift to a line chart, we can just see clearly here actually what happened in price. So because of that news, it did manipulate price a little bit. So when we get that, when it's very wicky due to news, just hop over to the line chart and we can see. Now we did have what you could say a shift in 15-minute momentum to the downside. However, know that that was induced by news. And also, you see this line? So this is the start of the day. We didn't have any liquidity taken other than news. So we want 15-minute liquidity taken at least once in a day, and it can happen twice or 3 times on high impact news days. Typically it's once. So if this is not news, I would have probably looked to buy around here somewhere. Because we had news that manipulated this, I'm thinking this could easily pop back. And as soon as we saw that shift, or as soon as I saw that bearish shift here, potential, I'm obviously not buying directly after that. So I waited for this liquidity to be taken. The key factor with this is the rejection candle. So we get a liquidity, another bearish candle, and it's the retrace candle that I'm interested in. Now we hop to the 1 minute once we have that bullish close. Now entry on this, A plus setup, A plus setup. So, okay, we've taken this 15-minute liquidity to the left. We've got a 1 minute range here. 1 minute bearish range is breached. What does it do? It leaves liquidity behind, okay? We've got the form of this drawn liquidity. Now, if I'd come to the 5 minute, you can see we have this fair value gap here. So having 1 minute liquidity and 5 minutes fair value gap is double confirmation on the entry. We come back. Now we know that 10 pip stop loss always. Just keep it super simple. 10 pip stop loss always. Never less, never more, not changing it, not interested. What does this do? It allows us protection below the lows anyway. Great. It also means that you don't have to be all that accurate with your entry. You could enter here, 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 here. Doesn't matter. Where did I enter? I was around after that rejection. So I waited to see price tap below this liquidity, tap into the fair value gap, and then market execute on this, to be honest. There's nothing wrong with market execution or a buy stop order. If you had a buy stop, it might have been a little bit higher like this. You would have been tagged in pretty much anyway. But I was super confident on this trade. Where was my TP on this one? Quite simply looking to target the highs. However, knowing that we could get a reaction off of this level and may not take the true highs. And I'm not going to be greedy, 6.5 on this is very good. This was 0.5% risk, so really that was a 3.25% gain. And then I missed the Friday, and this was a full 1% gain on, full 1% risk on this trade. So 5.5% on that. So let's play forward, and I'll show you the actual trade that passed the challenge. So, bar replay before this, go back to the 4 hour. Now the 4 hour had not taken the highs. This is bar replay, ignore that. Basically a continuation of the week before. We were still contained within this bullish range, which was this whole thing, right? Now, what's more likely to happen? It's more likely to continue following trend, right? We've taken 4 hour liquidity down here. So it's not very often you're going to get multiple 4 hour liquidity runs within the same period of weeks. It's going to be a bit longer than that, once every kind of 20 to 30 days, I would say. So it's more likely to follow 15-minute order flow. So pop that down to the 15-minute. And we're looking at the 15-minute ranges. Since I'm already long in here, stops at break even, didn't take any partials because I'm looking to pass a challenge. So, and I was already only 0.5% risk on that anyway. So I thought I'm not going to partial out because I'm not really going to take much profit. I'd rather just move my stops and trail them up, which is what I did. Wasn't in this second trade, let's just minimize that. Now, just being aware of what happened yesterday, we had manipulation of the lows here. It took 15-minute. This was a smart money trap because it's a POI with no inducement, which is why it took the whole thing, and I outlined that. So I'm classing this as a liquidity sweep. It's actually a really clean 1 hour sweep of liquidity as well, but it's obvious on the 15-minute, so we can stick that in there. And then it goes and creates a new bullish 15-minute range, which was here. So it shifts back bullish. Then we have this one here. And okay, then you might be saying, oh, but 15-minute then went bearish. But did it? It wasn't very momentous. Plus, looking at the 4 hour range, we are so close to the high, and we know that these are liquidity pools. They're like magnets to just suck price in. So I knew that I was that close. So I was very happy with taking that buy. Again, same story as the previous week. Retail traders getting sucked into the sells. What's this doing? It's taking buy side liquidity. It's rejecting, taking more liquidity here. It's selling off. What are retail traders likely to do? To try and sell and continue that. Well, there's no liquidity here. Even if you turn the fractals on, there is nothing on there. See, the only fractal is right up here. So it's going to take fractal liquidity. It's going to take the high anyway. So let's remove that. Now, if I just drop to the 5-minute first, well, once I had that 15-minute retrace, which was 8 AM kill zone anyway, so I'm looking to trade London, hop down to the 5-minute. We can see we had a clear 5-minute shift bullish. We go down to the 1-minute because there's no fair value gap there. You don't have to have it. It's just nice as an added confluence. And again, you don't have to have the perfect entry. Being on the right side of the market, entering at the right timing, where there's periods of predictability and increased liquidity and volatility, and having a reasonable and sensible stop loss is the most important thing. How tight or how precise your entry is not going to make or break you as a trader. Well, it might break you, because if you're trying to be too accurate, you're either going to get stopped out, depending on how big or small your stop loss is, or you're just going to take more hits because you're going to wait for your entry to be so accurate, or potentially even miss the trade because you're thinking, well, I want it to take this liquidity and I want this candle to do this. And then you end up just not taking anything at all. So this trade idea was based on the fact that we had a 1-minute MS to the upside, and we did have this liquidity down here. I actually missed this trade, which was really nice. There was no fair value gap, but it was a nice run on liquidity. So could have entered directly after this bullish retrace candle. But I waited a bit further for more confirmation with that 5-minute MS up here as well. And then price is pulling back. Now, I literally had it on the basis that, in fact, my entry was like here somewhere. My entry was on the basis that if it's going to take this high, then this liquidity run, you see that, would have failed. If it continued lower, it's not going to tag me in. I have a buy stop up here. It is not going to tag me in if it falls, so I'm at no loss. But if supply fails and demand is in control, following the 4-hour bias and the higher time frame bullish nature, it's not going to come and take more liquidity when it's already taken it, right? So it tags me in, and that's when it continues. And there was multiple more opportunities to get in around here, potentially around here as well, outside of kill zone, but that's up to you, what part of the world, where you want to trade. But there was multiple opportunities in here, and this is a prime example of you don't have to have the perfect entry. It's just got to make sense, right? So for me, it was about liquidity run and supply failure, the high time frame taking over ownership, and me looking at targeting the 4-hour highs, which were very, very close. Anyway, we had news at 3 p.m. that day, so I was thinking, well, I'm going to take the risk. I'm in profit. Worst that's going to happen is going to bring me back to like plus 1-2% on the account balance, which is fine because I'll just look to pass a couple of days later or following that week. Very neutral on emotions. Price did manipulate quite a bit. It didn't really do anything. I did not have a set stop TP on this, sorry. Was marking this as we went. See, we had a nice 15-minute liquidity sweep here. By then, obviously, I was already in the trade. And at this point, I'm thinking, right, where can I set my targets? Where can I look to take profit? So I'm jumping out to the higher time frame. And I'm just looking at areas of significance where likely the price is going to reverse. So it was the 4-hour that I came to look at. And I'm just looking over here to the left, marking out certain areas. We've got areas like this. Areas of significance are liquidity pools, liquidity magnets. Liquidity moves the market, so it's liquidity that the market wants. So like areas like this, and we can see this level that I drew was pretty much, yeah, that first area. There's the higher one. This was the lower one I chose. And actually had my TP just resting below. Why? Because I know what my target is. You see, I'm not making money on this because I'm in a challenge. So why would I want to exceed my profit target? No, I don't have to be right. I don't need to feed my ego. I just need to be aware of where price is likely going to react to, and it did react very well from that level. But I also need to only take profit in order to fulfill my objectives, which was to pass the phase. So as soon as it passed, I'm happy with that. And you can see how price reacted. I think it did push a bit higher anyway. And then I'll just fast forward to exactly where we are now. So you can see that was yesterday. And price now is pretty sideways, pretty corrective. Why? Because it's taken that higher time frame liquidity area, that area of reaction. So my analysis is now completely flat. I'll be starting from scratch. I've got my credentials to log into the next phase, which is here. You can see your account is in review. We'll email you when the review has been processed. Second stage, another 7.5%. I've not started anything yet, 0 trades. Automatically logged in. There's my credentials on the left. I'll fill you in as and when what happens with the second phase. Hey everyone, so an update on the verification. Started it yesterday morning. I did take 2 losses buying euro dollar where I anticipated price would follow the overall bullish momentum, but as we shifted on the 15-minute and had actually some kind of confirmation on the 4-hour, I'll show you in the trades. By New York yesterday I was short, held that, hit TP today, so that was an overnight trade. That was 6.4R. I was risking 0.5% because as my prop firm rules are stated, I will, from anything between starting balance and positive 3%, I'll risk only 0.5%. So I actually gained, 3.25% on that trade. This morning, Friday morning, took a short as well. That one banked just a little over 4R. Both had the same TP, a 4-hour liquidity point. Again, I'll show you both trades. So 2% banked on that one. So I've got 1.52% to go on a verification. Only started it yesterday. It's been a good week. Not every week's going to be like this. But again, full transparency, I'll show you the dashboard of the account. I'll show you the losing trades, the positions, show you the winning trades, and then we'll see what happens next week. Am I going to get this verification passed? How's it going? It is 8:49 Monday morning UK time. And as promised, weekend's over now, kids are at school. So I can run through the trades that I took last week on the verification. So I'm just going to hop over to my emails. So you can see, congratulations, you've been approved, progress to the next stage from Definitive Funding. And that was on Wednesday, the 29th of November. So that was the date that I got my credentials for the phase 2, the verification. And if I go over to the Definitive dashboard, we can see the dates on here on the performance. 29th is here where I got my account. You can see 100K fresh after hitting the profit target of 7.5%. I got 7.8. And then the next 2 days, I took some losses. So I lost £400 the first day, another £400 or so the next day. So I'm just under 1% in drawdown because I'm risking 0.5% of the account from starting balance to positive 3%. And clearly I'm not there yet, so I'm only risking 0.5%. So if I take 2 losses, that's pretty much 1%. Because what does that do? It gives me more opportunity. There's no time limits. There's no need to rush this. And also it significantly reduces the chance of me failing this challenge. And then we can see we finished the week at 103,439. So just over 3.4% on the verification. The profit target, if we can see over here, is 5%. So 3.44 out of 5. We've got equity drawdown, total equity drawdown max 10. And max daily drawdown is of the balance. So that is 5,000. I mean, that is going to be extremely rare. That means at full 1% risk, I'd be losing 5 trades in a day. Well, I have a maximum 2% daily risk exposure rule anyway, so that's impossible. And the equity drawdown is just based on how many losing trades in a row am I going to take. Well, now I'm over 3% on the account. I'm going to be risking 1 full percent, so we'll see how that goes. Technically speaking, I only got like 1.52%. to pass. So if I find myself in a winning trade and I'm risking 1%, the odds are in my favor that that trade's going to pass within a couple of hours or so, maybe even a few minutes, but we will see. I might hit some drawdown first. That's the nature of it. We don't know when the wins and losses are, right? So back to the charts. I'm here on the daily. We can just see that price has been pushing higher. I did mark out a area of liquidity, which was my TP zone for the 2 buys that passed my challenge a few weeks ago. And you can see price has reacted nicely from that area. Dropping down to the 4 hour. What happened on the 4 hour here? So the last 4 hour significant bullish leg for me was this one here. And we can see that price broke lower than that with a quite a heavily bearish candle. And then if we come back over to the daily, so that was the 30th of November, we can look as well as these daily closes are bearish. So a nice added confluence. If price is pushing higher like this bullish candle did on the previous day, it might be an indication of prices pushing higher further for the following day. Of course, the difference being here, we entered a significant 4 hour liquidity area. So hence we've seen that reaction. That could have carried on going, but that was a nice prediction there that played out. As soon as this bearish candle closed on the 29th of November, that gives me indication that prices could be pushing lower. And then obviously the next day does. A very heavily bearish candle. So we can anticipate at least the next day is likely to produce a lower candle. So that was my thought process behind the daily and 4 hour, looking for shorts more than anything. However, still on that indication that we could be taking some buys, we could be pushing higher. So I did take some losses buying around this region here, not gonna lie, but that was, 0.5% risk on 2 trades. And you saw it, I wasn't even a full 1% in negative. I think it was like 99,140 or something on the account. We can then see that our 15-minute ranges are producing bearish order flow, taking liquidity, creating new structure, taking liquidity, creating new structure, bearish order flow. Follow the bearish ranges. What does it do here? Takes liquidity. This is after we get that significant momentum shift on the 4 hour. Remember that range that I highlighted? So this is where I'm no longer looking for buys. I was buying around here in this region. Now, as soon as we had that 4 hour bearish MS, no longer looking for buys. I'm now on the cards for sells on the basis that the daily failed to close higher. The 4 hours had a momentum shift to the downside. We've reacted from that significant liquidity area to the left. You can see pretty much where my TP was on this second trade at least. And we are following the 15-minute bearish order flow, following the ranges all the way down. Now, do I have a area of significance I'm looking to target? Yes, we had this 4 hour or daily wick, which I had my TPs just resting above. And the reason I wasn't going to hold and be greedy is because we had Fed Chair Powell speech, 4 p.m. that day. I hit profit maybe a couple of hours before, 2 p.m. on both trades. I was happy. Do I want to be running, which I was at the time, about 4 or 5% in profit just to watch Powell say something and then me to be taken out and take 2 losses. No, I don't. I don't want to be doing that. It's not about passing a challenge or a verification in 1 or 2 trades. Again, we've got no time limit here, and I'm in a position now where I'm chilling because I've got no time limit and I've only got to find 1.52% to pass. And it doesn't even matter if I take a hit and I go backwards a bit. It's still only 5% profit target with no time limit. And we can see we did get a reaction. And of course, price can do whatever the hell it wants now. We could push to the upside, although I think it's unlikely. I think we'll continue to sell off slightly, although liquidity and momentum volatility has dried up to the downside. We're still following bearish momentum right now on the 15-minute chart. But anyway, if I zoom into this first trade, we can see following the 15-minute ranges, we had that 4-hour MS to the downside. We took 15-minute liquidity and we had that retrace candle close, which was the key for me. We did have some news, which I was trying to avoid, not restricted, but anyway, we had that. And then we're looking for a lower time frame area of interest. So let's just have a look on the 5-minute first and see if there was anything in there. We can see that I highlighted a 5-minute fair value gap inside of here, okay, which price does like to gravitate towards. If we go down to the execution time frame on the 1 minute, we see I keep that 5-minute fair value gap inside there, and I'm simply looking for a tap into it and some kind of 1-minute draw on liquidity, which we get with this high right here. Now that was a market execution, and that was a pretty good entry. It could have easily pushed up higher. I could have got a market execution and a fill like this, or a fill down here, but I'm waiting till the final 2-3 seconds of that minute candle to close before market execution. Most of my trades, 9 times out of 10, they are stop orders. They're sell stops or buy stops. But with this was market execution because I knew that this 5-minute fair value gap, that momentum to the downside on the 4-hour and the 15-minute, may not want to hang around very long. So I'm literally in from here, and I take no partials. I took absolutely no partials for this. So these were full TP, 0.5% risks because I'm literally, 0.8 in drawdown on the account. So I don't have any money to play with. So 0.5% risk on this and just waiting. Of course, I could look for scale-ins, but I have a rule where I'm not looking for scale-ins until I'm in profit. At least not the same day. We wait for that to play out. It's pushing back higher, but I'm not worried about that because the 4-hour and the 15-minute are showing signs of weakness and looking to push lower. We see our 15-minute ranges keep getting broken. We got another 15-minute range here. Yes, we push to the upside slightly, but it's such a small range. It's more looking for premium pricing. It doesn't take any sort of liquidity here, and I was very aware of the fact that we had these equal highs here. I did have that marked out, but the markets can be deceiving with things like double tops, double bottoms, where as long as you're following order flow, we are just waiting for some kind of 15-minute liquidity sweep. And what do we get inside of here? It prints a 15-minute wick, pushes lower, and then comes back and takes it. Look how impulsive that drive in is. Similar to here, the drive into the liquidity is impulsive. What's it doing? It's getting FOMO into the market. It's getting people to buy. So they're placing their stop losses underneath these lows. And what's that doing? It's then giving liquidity for the market makers. Same here, stop losses down here or down here, and then it's giving them liquidity to drive prices lower. So I'm waiting for the retrace candle on that, which we got. Now let's have a look at the 5-minute on here as well. Did I use any 5-minute confluence on this? Which you don't have to, but it's nice. Right, so we can see clearly that 15-minute drive there. Now this was around here, the tag. Move over to the 1 minute. This was a very conservative entry. This is a nice example of you do not need to choke the trade and be absolutely super sniper perfect on your entry. The important thing with execution is your directional bias. Was my bias correct? I was looking for shorts and the market pushed lower, so my bias was correct. Was my timing correct? Well, what timing was this? This was a little bit outside of kill zone, but we're looking like 10:30 in the morning. So time frame wise, it's still pretty good. I mean, anything up to about 11 a.m. GMT, I think is pretty good for London session. We're slightly outside of that kill zone, but the market's not perfect, so we give some breathing space. So I'd say timing is pretty spot on. And then lastly, it's not about where you execute, it's about where you place your stop loss. Now we use a 10 pip stop loss every single time, and where it was my stop loss placed, right above the highs. So meaning it's either not going to take me in and push higher, and who cares, or it possibly would tag me in and go higher and take me out. If it's going to take that high, then price is running higher anyway. So, you know, you make your bed, you sleep in it, you take the risk or lose the chance. And it's a case of, I was happy knowing that this last 1 minute range was bullish. If it breaks that, it's likely the 15 minute and the 4 hour is going to take over as a more powerful time frame. And that's exactly what happens. Yes, it drives higher, but at that time, 12 p.m. GMT, I'm not looking to trade at all. That would not be good timing. And it's likely just getting buyers on the wrong side of the market anyway. And that drives nicely lower. I'm not looking to scale in again because I'm not risk-free on this. I had at this point around here, about 1 p.m, moved my stop loss beyond break even on my previous entry. So my stop loss actually, I moved to here before entering on the second, and then I'd scaled down to around here just to lock in some profit on this. I kept this one open, again not taking any partials because I'm only risking 0.5% anyway, and I'm on a verification, so the idea here is to pass the target and not necessarily pay yourself. It's slightly different mindset, slightly different management when you're trading live funds, because the key of that is to get paid. The key in this is to get your profit target. And then we hit target 6.4R on the first, 4R on the second. So about 5.5, 5.2%. Okay, and you've got to obviously factor in I took a 1% loss the previous week. So that's where I am now. What am I looking at right now? You can see it's 9:02 on the 4th. It's Monday morning today. We did have a 15-minute liquidity sweep since 10 p.m. And I like to see at least one sweep per day. It's very quiet. There's a low volatility. We're heading towards Christmas. It's a Monday morning. So I'm not really interested in anything, to be honest. We're in the EQ of this 4-hour range. 15-minute range wise, we are pretty much not really doing much, to be honest. We're kind of just stuck in between here. So we could take liquidity here, but I think it's a bit too obvious. This could easily just fall out like this, and so be it. Or alternatively, we could see some kind of a short-term push. May even take the highs over here, and then if we see some retrace, and if we're inside, likely going to be New York kill zone for that, some kind of lower time frame confirmation for shorts, that could be a key to drive prices lower, but we will see. Anyway, I'll catch you later on. Okay, so it's 2:30 UK time on Monday. Just got back from some Christmas shopping, so decided I was not going to trade New York. Was just no time, wasn't about to rush things. It's only Monday anyway, and there's never any need to rush. There's always opportunity around the next corner, right? So I did sit at the charts for London session this morning. There was no setups. Bias for me for the day was to take the lows, was bearish. 4 hours continuing bearish momentum. 15-minute following 15-minute order flow. We'd already, if you see here, I'm just going to share the charts. We have a sweep of the high at 15-minute. Price has just continued to trail down. Then we had London session. Nothing really set up in here. We did sweep 15-minute London, but there was no lower time frame entry in there that fit the plan for me. And then that was it. I was gone by 10 a.m. anyway, shopping. And we can see that prices continued to take the lows. We may have had some microeconomic news that took that lower, but basically it's come back, it's filled this fair value gap. We then had some engineered liquidity as well, and prices rolled over to the downside. I may or may not have taken this live if I was sat here, to be honest. It's not the cleanest, but yeah, that's it for me today. I've got 25 minutes left of the trading session. Certainly not going to be buying or selling anything right now. There's absolutely no FOMO whatsoever. I'm not chasing the markets. It's only Monday, so we'll come back Tuesday. I'm only trading Tuesday because I'm actually collecting a new car tomorrow. I won't tell you what it is, but it's something that I've been wanting for a while, and I've been holding it off. Obviously, a lot of my time the last couple of years has been the house. been putting a lot of money in investing in the house. House is pretty much fully renovated, well, phase one anyway. We'll be converting the attic next as well, but I thought, why not get myself a car for the Christmas, something that I can enjoy. I've always been interested in cars, so I'll probably do some kind of content around the car. Let me know if you want to see that. But yeah, I'll catch you back on Tuesday morning, London session. Okay, so I've just taken a trade, literally like 5 minutes past 3. It's like 5 minutes over kill zone for me. I'm about to just go get my coat shoes on and go collect my son from school. Definitely not a FOMO trade. It's based on continuation. You can see my risk to reward is like only 1 to 1.6 or something. That's only because that's all I need to TP. Now, I'm risking 1% on this. I'm in the trade. You can see I'm in drawdown right now, but I have a large enough stop loss. 10 pips every time. We'll see what happens. If it's a losing trade, it's a losing trade. I don't really care. We had this fake POI trap with liquidity resting right above. We even got a 1 minute fractal in there as well. A nice drive in, but 15 minute is bearish still. Like, there would be no reason to buy off of this. It'd be like catching a falling knife if so. But we'll see what happens. This may just tag me out, but it is what it is. I have an alert set. If it hits TP, verification is done. One trade on Monday, that'll be it. And we will just see what happens. I'll catch you back later. Okay, so I know I said I wasn't going to trade today, and I wasn't looking for buyers or sells. However, in fairness, I was sat at the charts for the last hour of New York for me, which is like 2 till 3. I normally leave the house at like 5 past 3, solid, because I go and collect my son from school. But I was looking at the charts, I was answering Discord questions, which are all EU related really, anyway. And of course, I'm not trading the power of 2 on this challenge, although I am still looking for power of 2 setups, but I'm trading this way. And I was just seeing, as you can see on the screen, price just consistently producing new lower lows. So I couldn't help myself but jump in. So knowing that I had something like 1.5, 1.6% to gain on the verification to hit target and to pass the verification, I knew I didn't really need much of a position anyway. So I was targeting the lows that we'd created on the 15 minute. And the reason why I was looking to sell, and the reason why I was happy to sell there, and I will show you the outcome of the trade. Well, as you can see, this line is market open this morning, or 10 a.m. yesterday even. We did sweep on the 15 minute here. We just created a 15 minute bearish order flow, which we've been doing for days now. We swept again after London, and we gave a continuation into New York. Now, seeing this big sell-off down here, yes, we tapped into some liquidity area over here to the left, but we're not looking at catching falling knives, which is exactly why I wasn't looking to buy. If anything, I was looking just to short. The reason I took this, if we look on the 1 minute time frame, it's just a very, very straightforward ILM entry. So inducing buyers, liquidating, and then an entry to the downside. Again, with that set 10 pip stop loss every single time. It's not about the tight entry, it's about making sure that your bias was correct and just being in the market at the right time and with the right direction and giving your stop loss enough time to breathe. Now, you might be looking at thinking, well, what are you complaining about? That's a winning trade. And it was a winning trade. It tagged me in, although it did go into drawdown by like 1.65% because I was risking 1 full percent on this. But within 18 minutes, it was at TP. My TP went off. I was literally in the car, went to get my son from school, sat back in the car, looking at my phone, thinking, okay, well, that's the verification pass. That was easy enough, job done. Only to realize that I'm like $200 away from the actual target. How did that even happen? I don't even know. Maybe it was something to do with lot sizing, although I do have a 10 pip stop loss every single time, and I'm risking either 0.5 or 1 full percent in this position. It could be to do with maybe the way I was slipped into the position. It could be the way with the commissions on the brokerage. I'm not too sure. I'm not going to cry about it. Of course it sucks, because realistically with a 1.68 risk to reward, and I only needed something like 1.52. I mean, my maths isn't on point, correct me if you need to. We'll jump over to the dashboard just to have a look on there. We can see here, I'm literally 98% complete on the challenge now, 0% on the drawdown. It's ticking every box, right? This is the second stage, as you can see. This started on the 28th. So that was last Thursday, I want to say. Last Wednesday. Yeah, 29th was last Wednesday. That's when I started the account. That's when I had the first trade. So the first 2 trades were 2 losing trades at 0.5% each. That's fine. And then the next 2 trades were winning trades, bringing me over my 3% target for then utilizing a full 1% risk on the allocation of any future trades. This was the first trade at 1% risk. Because of that, I'm literally less than, just over $200 left on there. So this is an interesting one. I'm going to see if I can pass it. It's now 5 p.m. UK time on a Monday. I'm going to see if I can pass this by Wednesday morning. By the end of London Wednesday. I'm actually collecting a car tomorrow, so I will probably trade the first hour of London. I'm not going to be forcing trades. I'm going to be waiting for trades that meet my rules. Even this trade today met my rules. It was late in the move, so I would have probably done the same thing even if I was trading it live and for money. I would have gone in and out. I mean, it was still a £1,600 trade, so it's still good money for 18 minutes. I won't complain about that. But I'm going to see if I can pass. Maybe I'll just hit a string of losses. Maybe I'll hit drawdown. Maybe I'll blow the account. Maybe I'll lose the verification. I don't know. But we'll just see what happens. I'm documenting it. Tomorrow, I'm going to be on a train. I'm collecting a car tomorrow. And I'll share a bit of that as well on the vlog. And we'll just see what happens. We'll just see what happens. You know, maybe on YouTube in public, I'll fail the challenge. I'll fail a verification, I should say. It just goes to show that it doesn't matter, right? Like, anyone can lose a funded account, a challenge, or verification. It doesn't make you a bad trader at all. There's so many variables involved. Obviously, I'm doing very well on this, and not every challenge or verification that I've taken has gone as smoothly as this, believe me. This has gone very smoothly, which, yes, has partly to do with the strategy. Yes, it has an awful lot to do with the fact that I've been trading for over 8 years. It also has a lot to do with the fact that almost everything I do, about 90% of my daily habits, actions, rituals, thoughts, words, everything that I do and say is done with strict discipline, even though I have 4 kids. That's why I say 90% and not 100%. But also it's about market conditions. We can see that we've been really trending nice. Like, I was buying my challenge. You can see how nicely the markets were trending. I didn't take all of these. Some of these are my end of day journal trades that I didn't take. And then some of them are trades that I did. And then as soon as we shifted to a, albeit maybe short-term bearish market, we'll see. I've been just riding the wave, just following it down, right? So we'll see what happens. It's Monday evening now. Am I gonna pass or fail this verification? And am I gonna pass it tomorrow before I collect the car? Am I gonna pass it on Wednesday before I send this footage over to my editor? And this video, you'll be watching this right now at the weekend. I actually don't know what the outcome is, but we'll see. What's going on? So it's now Tuesday morning, 8:20 UK time. Just sat down, pretty much. Got my morning coffee. Looking at the charts this morning. Got 2 out of 4 kids to school. Just the last one to go. But yeah, just looking at the charts this morning, there's not an awful lot going on. It's pretty much a repeat of yesterday. I'm still looking for sells only. In terms of the verification, I've literally got like $200 because of how I somehow messed up yesterday with with my risk to reward. It wasn't a lot size because I'm using a fixed risk and always a 10 pip stop loss. So I can't see it being that an issue. I think it must have been the risk to reward. But that's fine. If it takes me the rest of the day or maybe even tomorrow morning, because I'm not going to be trading New York today, I'm actually going to be traveling. I'm going to be on a 3-hour train journey today. So, and actually my London session is going to be cut an hour short too. So I usually am available to trading till about 10 a.m. UK time, but we'll be leaving the house at 9 to be picked up in a taxi to go and get a train to go and collect something special today. So we'll see what happens. This is the chart, so it might be back to front. You can see we've got EU here, I'm just waiting. We broke the lows and are retracing in a minute. We have swept quite significantly on the 15-minute, although we've not followed through to the downside at all. But we'll just see what happens. If there's nothing this morning, there's nothing. If there is something, there's something. I don't need to target 10, 20R or anything like that. I need literally $200, $205 to be precise. So we'll just see what happens. I'm in no rush. Maybe I will jump on just outside of 10 a.m. kill zone to have a look on the train. I'm gonna bring my laptop with me just in case, although the Wi-Fi is probably gonna be terrible on the train. But we'll see what happens and I'll keep you updated. Catch you later. Okay, that's it, 9 a.m. We're gonna jump in a taxi now. So no trades this morning. Didn't manage to get that extra $200 locked in. But as I mentioned an hour ago, I'm not willing to rush anything. I'm not gonna bend the rules or go off plan just for the sake of a small profit target. So I'll sit and wait. I'll take my laptop on the train, see what happens. If I have to wait till tomorrow, then so be it. And I'll catch you later. Right, so I've just collected the car and it's 2 p.m. UK time, so obviously New York session's open. I brought my laptop because I thought that I'd have maybe 15-20 minutes before we drive home. It's a 3-hour drive home, but to know that I've only got like $205 to make to pass the verification, I thought why not just try and manipulate some cash from the markets. Of course this could lose. I'm in a short. I'll flick over to the screen so you can see the reasons why I took this short. We've got 4-hour double bottoms, 4 hours pushing to the downside. Yes, we're at this 4-hour liquidity pool that could react to the upside. But if we look at the 15-minute order flow is still bearish. We did sweep some highs before London this morning and we're continuing lower. It doesn't make sense for me to buy, so the only thing that makes sense technically is sells. So now it's all about market timing really. And of course this could push higher and take some liquidity at the top, but all I need is $200 and I can close this out. So let's see what happens. Am I going to pass this challenge and get funded in a Porsche Center, or am I going to fail miserably and just put myself back $600? But you know, it doesn't really matter what happens. I can come back next day and see if we can pass this tomorrow. But I'll check in later with you and we'll see what happens. £105,007.89. I'm going for a walk. Right, so the short I entered at 148 is when it tagged me in, and it faffed around for a bit. To be honest, I've never been so stressed in my life. Being honest, been sat here. I've got a Porsche outside that I've not driven yet, paid for it, and was waiting for this trade to play out. Of course, I didn't know, and I explained earlier, it could have just gone higher. I needed $205 to pass. Safe to say, that's done now. So I've just become a funded trader all over again inside a Porsche Center. That's another 100K added to the basket. And yeah, couldn't be more pleased, because now I can drive home, 3-hour drive, knowing that I don't need to place any more trades till tomorrow. So that was pretty cool, and I'll run through the trade later on and show you how I got involved. We'll see how far this trade goes as well. I've obviously closed it off now because I didn't need any more than that, but we'll see what happens. Okay, so we're now Wednesday morning. Yesterday was a pretty mad day. Yesterday was crazy, not gonna lie. So the challenge and verification is passed. You can see on the screen, I literally have it right there. I said I only needed like $205 because I messed up on the risk to reward, or perhaps the lot sizing on the previous day, on the previous trade. It didn't really take long to make, obviously, that short amount of money. Now, one thing to know, I did say that anything above 3% profit, I'm risking 1%. On the trade I took yesterday, it did not make sense to me mathematically to risk $1,000 to make 200 profit. So I had half risk on that. So even though the risk to reward still isn't really leveled out, knowing that I only needed like $205 to pass the verification, I was happy risking 500 to gain 200. But obviously if that was a losing trade, that would have put me back $1,200, right? So that was the mindset that I had. Plus, you've got to understand that I was not at home. I was not on my usual setup. I'd literally just bought a new car, and I was literally in the showroom itching to drive the car. I had not driven the car more than 3 meters out of the showroom into the car park space, and I had a 4-hour drive home ahead of me. So I was kind of all over the place. The emotions on a prop firm challenge are pretty tough anyway, but for me, very, very neutral. It was just the fact that yesterday I was just itching to drive home. I literally had, like I say, such a small profit target to make. I had my mouse over the cursor ready to close the position down just in case the account didn't close automatically in profit, which I know most prop firms don't. Even those that do claim that, it doesn't. So make sure you close manually. So there was a lot of excitement, and clearly it was being filmed as well, so additional pressure. So I'm going to go ahead and click here, progress to funding, confirm that, see what happens. There we go. So your account is currently in review. We'll email you once the review has been processed. That's now been reset to 0. So that's pending, and they'll give me a live account. So that was pretty fun, right? Now let's run through that trade again that I took yesterday. It wasn't the greatest trade, but you've got to bear with me. I literally opened my laptop at Porsche. Within 5 or 6 minutes, I was in the trade. Within 26 minutes, I was out the trade, and that was done. But still, you know, technically, it made sense. And how little time it took me, even with this lower time frame entry model, how little time it took me to analyze the market, right? I would look to the market in the morning. I have the video, you've seen it, before I set off on the train. There was no opportunities in London. I had zero anticipation of if or when I was going to pass. And you never know what sequence your wins and losses are. On this verification, my first 2 trades were losing trades. And then I had 4 winning trades after that, albeit the last 2 were very small, because on this one, on Monday even, I anticipated that would have passed, but for some reason I was $200 off. And then this one, I didn't need to hold to the end of this low here, which would have been in a live situation likely where I would have got out. Why? Because we had 3 p.m. news, and look what it did. With broker commissions, that would have probably hit my stop loss if I had held that, even though the trade idea played out further. But with that 3 p.m. red folder news, I would have been out of there. Anyway, we had that 15-minute sweep. We want at least that once a day. We created these double bottoms. I did mention that before I entered the trade. I even highlighted this and said that's a magnet for price. That's a liquidity area. It's a confluence for some to go long. So it's sticking there, stop losses down here, giving more liquidity to drive the market lower. This came back and just mitigated an extreme because there was no liquidity to fuel. Price then came back in. And again, it's nice to have 15-minute liquidity. News came and took that, but we'd already had it here. We'd already had that 15-minute liquidity. So I was happy to look on the lower time frame for an opportunity. So if I bar replay this, let's just have a quick look on the 5-minute. The only thing on the 5-minute is that next extra confluence was this imbalance here, this candle here that needed to be filled. And we did that. I then highlighted this whole supply area, which wasn't really something I normally do. But again, let's just say, I was forcing the trade. What did we need? We needed liquidity. I saw this tiny bit of drawn liquidity here on the 1 minute. You can see I had that highlighted. Once we'd drawn that, I'm then utilizing my range tool, which is just a GAN box. Utilize that most extreme 1 minute range. And it's going to do either one of 2 things at this point, right? It's either going to liquidate and tank higher, or it's going to fail and then push lower, which is eventually what happened. And I think I closed the trade around here because that's all I needed. And then you can see what happened with the news. Pretty crazy. So you don't want to be holding through that, although it would have hit TP if having it at the lows for like, what, 2.5 R on that, or continued afterwards. That's with, again, that solid 10 pip stop loss every single time. Gives you plenty of breathing space. Why was I happy to take that risk? That price could have gone higher. Of course it could have, but I was in New York kill zone. This was around a 145, 150 entry. So right in that prime time, 1:30, 2 p.m. New York, UK time kill zone, where we get that area of liquidity. Price was moving very slowly, to be honest, but that's because the buildup of the news. We want that volatility there. It takes liquidity to drive the markets lower, but I'm in and out by then. I wouldn't have wanted to be still in the trade holding through news. And the fact that the 15-minute is extremely bearish, following bearish order flow, taking liquidity and creating new lows, taking 15-minute liquidity and creating new lows. And even the 4-hour, when you're looking at it, is just driving lower. Not to mention the first confluence was the fact that every single daily candle since here has closed lower, giving an additional daily bias of lower prices. These are all stacking confluences, and that's what's allowed me to pass this challenge. And verification. Again, just want to finish up on here because you're going to be thinking, hold on a minute, this is a brand new strategy. Why are you not trading the power of 2? I am still trading the power of 2. And when we released the power of 2, this was a solution to our problem. And we've always been straight that this is something that is creating minimalistic rules out of a complex business, right? For those that are on the road, those that are trading from their phone, those that are not at home at their desk, those that have very little chart time, and beginners that need something that's extremely mechanical and extremely black and white, the power of 2 is ideal. And I'm still going to be trading the power of 2 Euro US dollar only, high probability only, and 4-hour momentum only. But that gives me probably 1, sometimes 2 trades a week at best, right? And me as an experienced trader, is what I would call myself. And I do like the complexity around multi-time frame and lower time frame entry models. I was very profitable on the lower time before we released the power of 2. Okay, so there's absolutely no reason why me and you watching this cannot trade more than one strategy. As long as it works for you, that's the key element. We're still teaching the power of two in the community. This strategy is being bundled up into brand new course content for Evolution members right now. I'm recording it every single week. It's gonna have about 15 to 20 different modules, and this video is gonna be part of it, passing a challenge, getting funded. And this will be released to members in January for those who want more complexity. And I'm being very strict and loud about the fact that this is not a strategy for everyone. If you are less than 2-3 years into the game, I don't want to teach you this. I want you to have skin in the game, because you need to have your emotions in check. You need to have a good level of how the market moves. You need to have lost enough trades to know not to avoid your plan, because there are plenty of times in the last couple of weeks where buyers are being induced, but sells are the only real bias that would have played out. And that's market manipulation for you. And also those that do work away from home or on the road or are trading from their phone, this is not a strategy for you. You need to stick to something mechanical and higher time frame and simplistic, like the power of two. If that means you have to wait 1 or 2 or 3 weeks for a trade, then so be it. That's your circumstances. If you are working from home, or if you do have more chart time, you have the ability to spend more time looking for entries, although to be honest, and this document has proved this strategy still is very mechanical, very rule-based, and you need very little chart time still. I mean, I'm probably averaging about 30 to 45 minutes a day looking at a chart, and most of that is because I'm answering questions in Discord from someone else in Evolution. That's not for my own trading. I'm still looking at the chart, 4 hours, done this, okay. 15 minutes, done this, okay. I'm setting an alert. I'm not looking at the lower time frame until the 15 minute has done this. And if it's not done this, I'm not interested. Okay, the 15 minutes done it, now let's look at the 1 minute. At that point, that's when I'll spend maybe 10-15 minutes waiting for an entry, just like you saw in the verification inside the Porsche Center. But usually it's very, very chilled. Again, I'm only focusing on one pair for that exact reason, limiting the time, limiting the focus and the amount of attention that I need to spend. If you focus narrowly on one pair, I honestly, professionally and personally believe you'll be more successful than trying to trade 4 or 5 pairs or even more. That's my personal opinion, and it also reduces your risk exposure. So anyway, I hope you enjoyed this video. It's very, very different, and maybe I'll do more vlog styles in the future. Let me know what you think in the comments, and the best comment, I'm going to give away a free month Evolution Markets mentorship in January, which will include this new strategy. So it gives you a fresh start for 2024. You get the best of both worlds. You can learn the power of two, and you can learn this new strategy to give yourself the best possible start for the next year. I'll see you on the next one, guys, and make sure you subscribe before you leave. Catch you later.